Hey traders, Cousin Vinny coming to you on Monday, the 2nd of September 2013 with a market read and a quick look at some of the things I'm following for the week ahead. This is my CBOE options equity put call ratio chart, and basically we see sell zones up here and buy zones. That's the PPO oscillator. And below we have the CPCE chart itself and the S&P 500 up above. We can see that we are below the 50-period moving average and that we're in mid-range here. We're really not in a buy zone like we were here back in June when we bottomed, and we're not in a sell zone like we were when we hit this peak here in the beginning of August. Now the next chart is the advanced decline, and what we're looking for here is a spike like we saw here last week, a big red day followed by a green day or two, which would show funds buying. So this is what I'm waiting for here. That's what the note 1 and 2 is about. The ADX, the reason why I like ADX is because it shows the strength of the trend. Note that when we were uptrending here back in April and May, that the ADX indicator was cruising higher. When it's over 25, that's telling you that we are trending, and the slope here is telling you the strength of that trend. What you look for after you're in a position, say in the SPX, you look for a peak and a turn, which signals the change in the strength, and subsequently you can look for a move down, which is what we saw here in June. When you see a sideways range here below 25, typically you get sideways action. So we have these two highs that aren't too far off of each other, and this range here, low, and looking for a low here to follow through on what I'm thinking is a head and shoulders neckline here around 1580. Bullish percent, you can see where the red and green lines where we got down lower and we had a nice turn in the bullish percent. Down below 70 is what I'm looking for. I'd like to see down here in the 60s to give us a really good place to base and to bounce in the 1575, 1580 range. I'm not saying that that's what's going to happen, but that's what I'm looking for. And bullish percent is continuing to head down. NYMO has been bouncing around below the zero line. And what I notice here in this chart is where I've noted we had a crossover back in December, a bull cross of the 10 and the 30. We had a pullback, 1, 2, 3, 4 pullbacks before we had a crossover to the downside. So we had 7 months basically of a nice uptrend. We came down, we bounced in June, and then very quickly we moved back up and we failed again. So that sticks in my head as one of the reasons why I think we're going to see further downside, along with the fact that August, September are typically the weakest months of the year, so-called seasonality. Stocks below their 50 DMA, the chart speaks for itself. What we're looking for is for stocks to get oversold. There's only currently 31% of stocks that are above their 50 period moving average. The remaining 69% are below, and once we get down into this buy zone area, we look for a turn along with the other indicators to line up to give us 4 or 5 positive indicators indicating a good bounce area. The trend is basically the ARMS index, and it compares advanced decline issues relative to volume. Often you see spikes which indicate capitulation, like we saw here in June at this bottom. We did see a spike last week as we indicated on the other chart, but we only managed to rally back up to the descending 10 period moving average, and then when you see these tails here where sellers took over and we moved lower. So right now we're forming a bear flag under this trend line that goes back to goes back to November, and I'm looking for this test possibly to either move higher. Futures are higher currently, and possibly give us another box setup. A box setup would be in this zone here between the 30 period moving average, which is turning over and moving lower, and the faster 10 period EMA. So when we bounce up into that area, that's what I call a box setup. I look for a short here. I don't expect to see a bounce for a little while anyway, until we see a crossover back in the other direction where prices get back above the 10 period and we start to see the 10 period EMA turn up and move upward. I also like to watch the institutional index, New York Stock Exchange ARCA, the XII. This is a capitalization weighted index of 75 stocks most widely held as equity investments among institutional equity portfolios. The index is designed to reflect the performance of core stock holdings of institutions. We watch the buying and selling of these institutions as they push the market around. Okay, so we see the same thing that we saw in the spiders. The thing about this index that I like the most is that it is 75 stocks. It's easier to push these stocks around, and the markets, if you watch this, you'll notice that the stocks that are in this index are names that you know very well. So let's take a look at that index in a candle glance format so that you can see what I'm talking about. So basically we're oversold. We look like we're trying to turn back up. We are at the 618 retracement level. We are basing out there. It's a possibility we could bounce here up into this zone here, like I said before, for a box setup. Now these are the 75 stocks that are the components of the XII. I have them in a candle glance format, basically to show you that these names like Apple, Amazon, Boeing, and so forth. The nice thing about candle glance charts is that you can see all these charts at one time. You can see the RSI, which I have overlaid here at the bottom, and with the exception of only a couple of stocks of these 75, most are either turning down off of the 70 or they're oversold, possibly in an area where they might turn and bounce, but for the most part many of them are weak. So if you just scroll down through this list, what I typically do is I look at these to see where we are in the cycle of a bounce or consolidation. So I find this very useful. Bristol Myers, Citigroup, Caterpillar, Colgate, and so on. So you just scroll down through this list and you can see where we are on the RSI. The second group, Goldman Sachs, Halliburton, Johnson & Johnson's weak, IBM. So very quickly you can scroll through these and see where there's any setups, or if the market looks like it's going to continue to move lower. Simon & Schuster, UPS. So you get the idea here. Where are you? Okay, you want me to open that for you? Okay. You have two of them? Okay, so go ahead and go eat it. Okay. All right, I'll see you in a few minutes. Go upstairs. Rather than cover this in a video format, I posted on my blog RSI. I recently came across a twist on using the RSI and on-balance volume together, pointed out by Stephen Stewart. So, hat tip to Stephen. That's what this blog post covers. Go ahead and read this. I'll post a link down in the comments section down below. I'm not going to go over this again, but basically you can see in charts like Carter's Holdings that once relative strength gets into this overbought zone, a lot of times it'll embed and it'll forecast things that are going to happen in the future, possibly, if you watch on balance volume together with the strength relative to the SPX, which is what this is, CRI to SPX down here. So these are some of the things that are in this post. Go ahead and read it. I won't go over it. It's just too much material to go over in a video, and I don't think you guys would be interested anyway for me to cover it in a video format. So just go through this and see if you pick up on some of the things I'm pointing out here, and we'll talk to you tomorrow. I hope this helps. This is going to be a short video today. This is Cousin Vinny coming to you from Daytrading Bootcamp and theclosingprint.com.